a lot of affection which you are showing to me. This is 6th or 7th talk I am giving to Telangana. So I talked about a lot of things. I am gradually improving myself in my talk also. So there is a little change in my talk as the years pass on. So my special thanks to our President and Secretary of the Telangana State IAP for giving me the opportunity to talk to you. But the only problem for me today is almost our WhatsApp group is full of people with highest qualification in finance, so doctorate or master degree, most of them. But what I am going to tell today is like LKG level. So probably it will be a little boring for them. But anyway, for the benefit of the youngsters and the people who have joined relate in this group, I'll start with the basics. So next time when we will go a little deeper into the fund and selecting the funds and all other things will go in the next. So today I will stick on only to the basics. So now I will go for the talk.
So you can share.
Yes, sir. Sir, is it visible, sir?
It is visible. Just make it big screen, sir.
Yes, sir.
Yes, sir. No, the screen is not at big, sir. Kindly make a full screen.
For me, it is showing a bigger screen here, sir.
Dr. Pawan, are you seeing the big screen? Participants, can you say just thumbs up, big screen?
No, sir, it's half screen only. Sir, go back and again redo it, sir. Probably
you discontinue, sir, and share it again, sir.
Yes, no. Now I will again join.
Yes,
is it full screen?
We are not seeing, sir. I'm getting some messages saying that the full screen is not there. So this will be the first part on the mutual funds. If the time permits and the sir consents and gives her confirmation, we will go for a part 2 also subsequently with a more deeper into the names and the top funds and the portfolio management. Sir, it's still not there, sir. Yeah, I think you have to press that.
Is it full screen now, sir?
No, sir.
So I don't know what problem, because here in my computer I am seeing full screen only.
No, make it a slide share. Make it slide share, sir.
Slide share you can go, sir. Slide share you have done, sir.
Yes, sir. I'll stop share.
Yeah, make a slide share and then blow it up, sir. I think, sir, now it is full screen. Participants, are you seeing the full screen? Please chat yes. Yes, sir, your screen is visible full screen, sir. No, again it is gone. Yeah.
Full screen, sir?
No, earlier it was there, sir. Now it is. Yeah, I think they are all saying yes, sir. I am not seeing, but the other participants are saying yes. Now again it's gone to the small screen.
So there is some problem, sir. I don't know what to do.
Okay, you go ahead, sir. I think it's partly visible. We will continue with the talk, and whenever we get a break after 20 minutes, we'll try and rearrange it, sir.
So one more time, I think I'll
try. Ragul, you're seeing in your screen, right? Or they can zoom, they are saying, sir.
Yeah, we can zoom it ourselves. I think it will come into.
Okay.
Can you go first, sir?
You can go ahead, sir. People are saying they will zoom and see.
Oh, okay, sir. Because I don't know what is the problem, but for me, it is showing full screen here.
For me, it is not showing. Some other people are all small screen also, they are telling. Let us go ahead and then start the talk, sir. And when the break comes, which you are taking after 20-30 minutes, we'll
Okay,
try
sir.
and rectify at that time.
In between, it has come, sir.
Yeah. You want?
Sir has to just put the slide share.
What, sir?
Just
Sir, go for slideshow. Slideshow. The bottom right icon is there. Bottom right
Okay.
icon is there. You press it. It will, the whole screen will come.
1 minute, sir.
Sir, your PPT is with me. You want me to try?
But once you start sharing, I think I lose the control, sir. You have to change every time.
Yeah.
I have just circled it, where one has to click, sir has to click it with the yellow.
Where? Red ink, huh?
Or I think you will share. Will you share, sir? I will talk.
I will try, sir. I will
Okay,
try.
sir.
Let us see, sir.
Okay, sir.
I will try.
Please
You
stop
please
sharing.
stop sharing, sir. Then I'll go ahead.
Join ga Lelo. Hello. No join ga. Voice unmute.
Are we seeing, sir?
Yes, sir.
Sir, whenever you say next, I will do it, sir, if you don't mind. Is this the first screen, first slide, sir?
Oh, yes, sir. Yes, sir. Yes, sir.
Pawan, please admit people who are waiting room.
Yes, sir. I'm admitting them, sir.
Thank you, Pawan. We will start the talk now by Professor Dr. S. Tirumalai Kolandu, sir. Sir, go
Yes,
ahead,
sir. So we are going for the very important topic that basics in investment of mutual fund. So we are going to cover it as two parts, part 1 and part 2. Next slide. So we are going to cover part 1 today.
Oh, 1 minute. The slide is not moving, sir. Sir, I'll stop sharing and then I will go ahead and get a new share. Probably.
हाँ डाउट करो.
Sir, are you sharing the screen? I saw some
Is
slides now.
it full, sir? Is it full?
Yeah.
Hmm?
Yeah, sir. Yes,
Can I
sir.
continue?
Yes, sir.
Can I continue now, sir?
You can continue, sir.
Yes, we are going for the mutual fund investment, which is going to be a very important part of our investment. We are going to cover it as a part 1 and part 2, because as you know very well, it is a long topic. It is very difficult to cover everything in one go. So we are going to make it as a part 1 and part 2. So today in part 1, we are going to cover only basics. When we talk about basics, a lot of things are there. Why to first let us know why to invest in a mutual fund. What do you mean by a mutual fund? What are the various terms which are commonly in mutual fund investment? Major types and some choices in mutual fund. What is the prerequisite to invest in mutual fund? How and where to invest? These are all some common problems we come across. Yes, so some more basics. We are going to talk about mutual fund returns and how to select mutual fund for investment. And it should be a goal-based investment, when to exit, how to track, what are the tax implications, and how to read a fact sheet of the mutual fund. So totally 13 things are here. If you are going to master these 13, you are going to be a very confident investor in mutual fund. So we'll go one by one. First, let us talk about why should you invest in mutual fund. There are, as you know very well, there are 5 asset classes for investment. Fixed income securities like bank FDs, gold, real estate, mutual funds, shares. So totally there are 5 asset classes. We can choose asset classes according to our age, risk-taking aptitude, and all these things. We can choose any of the 5 asset classes. Here, when we choose an asset class, which are the qualities that should be there for the investment? Number 1, it should be a minimal work and maximum returns. Number 2, the investment should be very simple and sensible. It should not be very complicated. It should be very simple and sensible. Number 3, very important thing, the returns from our investment should beat the inflation. Number 4, this investment should be facing towards our long-term goals. We've got a lot of goals, short-term goals, long-term goals. So it should be aimed at a long-term goals. And finally, very important thing, we want to attain financial independence very early in our life. So this investment should help us to attain financial independence very early in life.
Every alternate Sunday, mutual funds अभी चल रहा है.
Can I stop? All the people mute yourself. We try to do, but it's not happening. Please mute yourself.
अभी start करेंगे सर. वो technical से start करेंगे. आपका friend है.
Kindly mute yourself. Dr. Harish, you are audible to us. Yeah, sir, go ahead.
Yes, so now we are going to come to an important point, inflation versus investment. See, whatever way, whatever thing you want to invest, you can invest. But the only thing, the returns from that investment should beat the inflation. Now we can add one more thing. If your income tax, you are going to pay tax for your income. So we can add like this, your post-tax returns from any investment should beat the inflation. If you want your post-tax returns to beat the inflation, at least you must get 10% returns from your investment. This is possible only with mutual funds and stocks. In fixed income securities, something like PPF, Suganya, Samriddhi, Vayana Yojana, these things gives a tax-free income. So that will be amount to almost 10% returns. But all other investments will not beat the inflation. Only thing that is going to beat the inflation is your mutual fund and stocks. If you are a little more intelligent and capable, you can invest a little more intelligently, and you can get an income of 14.5% or more, your money is going to double every 5 years. So we are going to aim only for this. Minimum 10% return should be there, if possible, more than 14.5%. So this is going to be our strategy. Next, we are going to have small asset allocation depending on this. See, fixed income securities, I know very well, they are going to give very low income of 5 to 7%. This is suitable only for retired and little aged people. So young people never go near bank fixed deposit because you are not going to beat the inflation. Number two, gold. Of course, gold gives little more income than the fixed income securities. But even if you want to invest in a gold, 5 to 10% only you can invest. That was a paper gold. Sovereign gold bond is better because gold ETF has lost its tax advantage. So sovereign gold bond is going to be better. Then if you take real estate, it's highly variable returns. Flats, never buy flats as investment. You can go for commercial properties or REITs. So if you leave alone these three investment, remaining two investment are very important. That is mutual fund and shares. Mutual fund is going to give 12 to 15% returns, whereas shares are going to give 15 to 20% returns. Naturally, mutual funds are very ideal for a normal investor. So you can go for almost 50% asset allocation in mutual fund and 20% you can allocate for shares. If you're very well versed in stock exchange, stock market, then you can increase your stock allotment to 30 or 40%. Correspondingly, you can reduce the mutual fund. It depends on your knowledge and interest. So this is our basic asset allocation. Then, if we follow the policy, we are going to see three important things: work less and chill more. You have to save more money and invest properly, and you are going to enjoy life. We only live once. So life should be enjoyable one. For that, we have to attain financial independence very early in life. For that, mutual fund is going to be very, very important investment. Now, we are going for some basics of mutual fund. See, what do you mean by mutual fund? It is very important, very simple thing. Some company like things as fund houses, they collect money from different persons and they invest in company stocks or debt instruments like government bonds, corporate bonds, money market instruments, government securities, or they are going to invest in commodities like gold. So they collect money, they invest in any of the three things or all the three things. So this is nothing but the mutual fund. What are some basic terms you must learn in mutual fund? Number one, what do you mean by AMC? AMC is nothing but asset managing company, or commonly we call it as a fund house. They are the people, they are going to collect the money from different person and going to invest. And fund manager is a very important person. Fund manager is like a captain of a ship. And the fund manager is important to get good returns from the particular mutual fund. So when you choose a mutual fund, you have to see whether that particular fund manager is good also. Then, what do you mean by NFO, new fund offer? A fund house, a mutual fund house is going to offer a mutual fund for the first time in the market as units at face value. Commonly, this face value is 10 rupees. So first they are offering it in the market. They are called new fund offer. After the new fund offer, you can buy the same mutual fund units in the market. In the secondary market, you can buy it. Then, what do you mean by net asset value? Your mutual fund is investing in stocks. It is earning money and creating assets. And the total assets of your fund, you just minus all its liabilities. Then you divide it by the number of units, how many units of mutual fund that particular fund house has issued. You divide it by the number of units. What you are going to get is net asset value. Each fund will declare net asset value on a trading day at the evening. So every day they are going to declare NAV. Then what do you mean by asset under management? The total market value of the securities. For example, a company has invested in 100 stocks. The total market value of all these 100 stocks, they are called, totally it is called asset under management. So these 5 terms are the common terms which you have to see. Now we are going to see what are the major types of mutual funds. So when we go into the major type of mutual fund, there are 5 types. One is equity funds. They are going to invest in company stocks or public sector unit stocks. They are going to invest in company stocks. Then a debt fund is there. They are going to invest in debt instruments like corporate bond, government bonds, and other things. Then hybrid funds are there. They are going to invest in both stocks as well as debt instrument. Then 4th category is a solution-oriented funds for a particular solution like retirement, for child education, for a particular solution. That fund is going to invest and produce income. So that is called solution-oriented funds. Then 5th category is what is called index fund. They invest in particular index. In Nifty 50 means they will invest in the top 50 companies which make up the Nifty. Then FOF means funds of funds. They are not going to make investment in the individual stocks, but they are going to invest in other funds. So that is called FOF. So these are all the 5 major categories of the mutual fund. Now, we are going to go and see only one, that is equity fund alone. I am going to tell you what are the various types of equity funds. Number 1, large cap. They are going to invest in the top 100 companies according to the market capitalization in the stock market. Then, what do you mean by mid cap? They are going to invest in the next 101 to 250 companies. They are going to invest. And large and mid cap, totally they are going to invest in the top 250 companies. That means it is a large and mid cap. Small cap, you know very well, after 250, there are a lot of companies. Any company you can invest, that is small cap. Then what do you mean by flexi cap? They are going to invest in a large, mid, and small. They are going to invest in all the 3. But ELS is another important scheme, that is an equity linked saving scheme. The only problem is your money will be locked for 3 years, but this fund has got ATC IT benefit. So for ATC IT benefit, ELSS fund is very good. Then focused fund, it is focused on a particular theme. So if totally they select only 30 stocks, and any sector, any industry, they are focused on 30 stocks, they are going to invest only in that particular stock. That is focused fund. Sectoral fund, particular sector, like a pharma sector. Thematic fund, particular theme, like agriculture. On a particular theme, they are investing. Dividend yielding fund, they are yielding in stocks which will give good dividend. And contra fund, they will be investing in stocks which are not doing now properly, but later on future, they think it will be doing better. So they invest in contra, that is contra investment. What are value funds? They invest in stocks which are undervalued at present, that is valued fund. So only 10 types of funds are there in equity funds. So if you know all the 10 funds, we can choose whatever we want. We'll go for the next one. We are going for few choices in mutual fund investment, like growth, dividend, open-ended, closed-ended, regular, direct. So there are 3 choices for our investment. What do you mean by growth? If you invest in a growth option, you are not going to get any dividend from your investment. But whatever the profit that company is earning, it will be again plowed back. So your money will be compounding. Then the dividend you are going to receive again being invested. So again and again your money is being plowed into the mutual fund. So the power of compounding plays an important role here. This is only suitable for persons who want to build a good corpus. But a dividend option is a little different. You are going to get regular dividend. Your fund value will not increase, but those who want to have regular income, like retired people or people who are not with the active job, who wants a regular income, they can go for dividend option. So very important thing, those who want to build a corpus, go for growth. Those who want regular income, go for dividend option. Then open-ended, closed-end. What do you mean by open-ended? Open-ended fund you can buy as a new fund offer, or you can buy anytime in the market. and you can sell it at any time. It is a more liquid. But closed-end funds, you can't buy at any time. The fixed maturity plan, only when they issue, you can buy, but necessarily you have to keep it for 3 years. Lock-in period is there. But ELSS is also a closed-end fund, but you can buy it at any time. But there is a lock-in period of 3 years for your investment. So there is low liquidity, compulsory lock-in period of 3 years is there. So it is beneficial only as a ELSS, not other purpose. You always go for only open-ended. Then, what do you mean by regular and direct? You buy mutual funds either through the fund house or through a demat account or through a broker or something like that. Naturally, there will be brokerage charge of 1% will be added up to the expenses. So this is what is called a regular investment. In a direct investment, you are directly buying a mutual fund through online. There are a lot of apps are there for this one. Here, there is no brokerage. So your returns will be 1% more. So young person who are well versed with this computer, you can go for online purchase and other things. You better choose only direct option rather than regular. So I told you better choose open-ended fund, direct option, growth. These three important message I want to give it to you. Then, if you want to invest in a mutual fund, what are the prerequisites to invest in a mutual fund? So basic knowledge is a very must. For any investment, you must have some basic knowledge. Then, if you want to take the investment for a period of 7 to 10 years, then only you can invest in a mutual fund. If you want your money back in 2-3 years, never invest in mutual fund. Third important point, many times we invest in mutual fund depending on the advice of our friends, relatives, or half-baked mutual fund advisors. Always we end up in loss. Never rely on others' advice. You read for yourself and invest. Number 4, I've seen a lot of people investing in 20, 30, 40 funds. Never invest in more than 5 to 7 funds. If you are going to invest in many funds, naturally you are not going to follow any of the funds. Naturally, you are not going to take decisions at correct time. So you are not going to follow the particular fund. Then you can put money in the mutual fund either as a one-time investment, as a lump sum investment, or you can systematically every month you can put money and invest. The systematic investment in a mutual fund is always better because you will be buying when the market is down, you will be buying when the market is up, you will be buying when the market is steady. But in the lump sum investment, if you invest during a bull phase, when next time when it go for a bear phase, naturally your investment is going to come down. So never invest lump sum. You always go for a systematic investment plan. Then as I told you, follow-up is very much essential for any investment. Then next part we are going how to invest in a mutual fund. See, for mutual fund investment, 3 important things are needed. 1, KYC registration. Number 2, PAN card. Number 3, your bank account. One small advice, your name should be same in your Aadhaar, in your PAN, in your KYC document, and your bank account. If there is any spelling discrepancy in any of the 4, you just correct it with your Aadhaar. If there is any problem with your spelling mistake or something, it is going to be difficult later on for redemption and other things. So make some corrections. Now, what do you mean by KYC? KYC is nothing but know your customer form. So unless you give KYC, no investment is possible now. So it gives every information about your identity, your address, all information it is going to give, and it is going to be supported by Aadhaar, PAN. What do you mean by IPV? In-person verification. Some they demand in-person verification. And government authorizes CERSA as a central KYC registry. These are the people who are going to maintain your KYC. They are acting as a KYC registry. So first step to invest in mutual fund, you must necessarily have a KYC. Then, where to invest in a mutual fund? There are 4 or 5 routes. You can invest in a fund house, broker, demat account, or through BSE or NSE also you can invest, and direct online also you can invest, except direct, all other things you have to pay brokerage. Now, let us see one by one. NSE and BSE has got their own separate online platforms. You just register online, you give bank mandate, and there are some, I will post some net connections for this. So you just register and have a bank mandate given for BSE or NSE. So at any time you can buy any mutual fund like a stock. So this is one good option, very easy option. Number two, you can directly buy from the fund house, branch office, or investor service center. Here you have to submit an application form, bank check or draft. This is highly irritable way of investing. Never go for this one. Then third thing, you can go through your brokers. Brokers are little advanced now. They also registered with the BSE. They give the bank mandate so that you can do everything through the mail. Moreover, these brokers are having a lot of apps like OFA, IFA Planet, Mint. These apps provide buy, sell option, statement, and capital gain statement, everything these apps are giving. So it is very easy for us to follow our funds. Then you can buy through your demat account also. Again, this is not direct. There will be brokerage. You can buy ICCA direct or Religare, anything you can buy through your demat account. Then fifth very important thing is direct online purchase. A lot of apps like Grow, ET Money, MyCamps are there. They are giving direct online purchase platform. No brokerage. This is highly advantageous to invest. Then what is the method of investing? I told you lump sum investment. It is highly risky because when you invest lump sum, when the market is very high, you are going to end up in trouble. But you can invest lump sum in two occasions. When you get a huge amount, for example, selling a house, you get a huge amount. At that time, the market is very low, like today, the bear market. Then you can make a lump sum investment. Then you are going for a systematic investment plan in a particular mutual fund. When the market is very much down, you can top up the SIP with a lump sum investment. That also you can do. Otherwise, the ideal choice for everyone is a systematic investment plan. It can be monthly or weekly. Fixed amount will be deducted from your bank account if you give a mandate, and you will be buying stocks at a lower price, at a higher price, at a steady price. So it will be doing a rupee cost averaging. So this is the best method. Then if you got lump sum money and you want to invest in a mutual fund, what you can do, you can put the lump sum money in a debt fund. And you can give a mandate for what is called systematic transfer plan. So every month, a fixed amount will be taken from this debt fund. It will be transferred to a equity fund, that is STP. Then you are nearing retirement. You already invested a lot in mutual fund. Now being a retired person, you want to have regular income. Now you can go for systematic withdrawal plan. So every month, some units will be redeemed and they will get the money and deposit in your account. So regular income you will be getting through systematic withdrawal plan. So short, for youngsters, systematic investment plan is the best. For retired people, SWP is very suitable. Then mutual fund returns calculation, there will be some misleading calculation. For example, some will give, you invested in 10,000, it becomes 17,500 in 5 years. So overall return is 75%. Never rely on overall returns. Suppose you divide this 75% divided by 5, you'll get an annualized returns of 15%. This is also not a reliable indicator because it is like a simple interest calculation. So this is also not good. When you make a lump sum investment, if you want to know what is the return, you have to go for CAGR, compounded annual growth rate. This is the correct returns that will indicate your returns in a lump sum investment. This is like compound interest. Then if you are investing as a SIP, you are investing at various time intervals. So here CAGR will not apply. For SIP investment, you have to look for XIRR, that is external internal rate of returns. You have to look for in SIP investment. So these are the two investment, returns calculator. Other calculators don't rely much. Then we are going for the third part, selection of a mutual fund to invest. How you are going to select. Now we have seen what is mutual fund, what are the types of mutual fund, where to invest the mutual fund, and what are the prerequisites of mutual fund. Now we are going for the next one, selection of mutual fund to invest. See, when you select a mutual fund for investing, it must have a good track record and good promoter. And you look for the talent of the particular fund manager. If the fund manager is very talented, previous record, and never look for the 1 year return of the mutual fund. You look for the past returns, 3, 5, 7, or 10 years returns. If it is good, then it is okay. 1 year return may not be very good, never bother. Then you compare the returns of a mutual fund with a benchmark. Each and every large cap will have a benchmark, and small cap will have a benchmark. You compare that with the benchmark returns. Similarly, if you take a large cap mutual fund, there are similar large cap mutual fund. You compare your fund with the peers, whether they are performing well when compared to your peers. Then look for the expense ratio. So each fund has got an expense. They have to give salary to the fund manager. A lot of other things are there. If the expense ratio is high, you are going to lose a lot of your income. So if the expense ratio is less, that it is very good to invest in the particular fund if the fund is good in all other aspects. Then check the quality of its portfolio. In what stocks they have invested, whether these companies are good, just to check the portfolio. Similarly, you check the exit load also. Many companies charge, if you leave the mutual fund within 1 year. If you leave after 1 year, they will not charge you. If you leave within 1 year, they will charge 1 or 2% as an exit load from you. Check the exit load also. If it's enormous, never go near that fund. Then I'll have some small examples here. 1, 3, 5, 7, 10 years here, Axis Blue chip. Just look at the 1 year, 3 years, 5 years, 7 years, 10 years return. If you closely watch 3 years return of the Axis Blue Chip Fund, it is performing less than the benchmark. Benchmark for this is S&P BSE 100 TRI. Total return, TRI means total return index. So this is the benchmark for this large cap Axis Blue Chip. So when you compare with the benchmark, this is less. Then you compare with the what other large cap equity is providing as a returns. Here also it is less. That means by seeing this, Axis Blue Chip is not performing well for the past 3 years. So you have to be careful. First, you can stop further new investment. Then if it is not performing well again, you can come out of the investment. So you have to look for the returns of the various time frame. Then here is a small comparison. See, the blue line is the Axis Blue Chip and brown line is the large cap returns and the green line is the benchmark return. If you closely watch this, Axis Blue Chip is performing less than the benchmark and this large cap returns. So you have to be a little careful with this particular fund. Then peer comparison. You can have this is from Morningstar. They will give you star rating for your mutual fund. You can compare the returns with other funds in the same group. Whether your fund is good or not, you can take a decision by peer comparison. Then exit load, see here, they are given clearly open-ended fund exit load 1% for redemption within 365 days. That means if you are going to close your fund within 1 year, you have to pay 1% as a reduction charges. So you have to be careful. If the exit load is very high, you have to be careful with the fund. Then expense ratio. Just look at the expense ratio of the piece. If your fund which you are selecting for investment has got a very high expense ratio, that means your returns are going to be less. So you have to be very careful in that fund. So exit load also you have to see, expense ratio also you have to see. I think can I have a short break of 2-3 minutes, sir?
Yes, sir. Thank you very much for that first session, sir.
Yes, sir.
Dear participants, we'll have a small break of 5 to 6 minutes. You are live. I'll keep the connection live. You can all stay there and you can put little bit, take a break if you want, and then you can put some questions. I will try to tabulate all the questions and accommodate in the end if possible.
Sir, can we start, sir?
Yes, sir, we can start.
Sorry for a short tea break.
I welcome all the participants back to the session, and post intermission, Dr. Kalundu sir will continue with his first part of the mutual funds. Sir.
Yes, sir. See, next part, what we are going to see is a very important part. That is, we are going to invest in a mutual fund that we have seen already, how to invest, where to invest, what is mutual fund, all the basic things we already seen. So now what we are going to see, it is a goal-based investment. It should not be haphazard investment. We must be a goal-based investment. So next 2-3 slides will be what is a goal-based investment we are going to see. See, when I talk about goal-based investment, there are two types of goal. One is short-term goals, another one is long-term goals. For short-term goals like buying a car or purchasing a house, or you want to have a foreign travel, then you must invest only in a debt fund or fixed deposits. For a short-term goal, never invest in a equity mutual fund. But once your long-term goals are defined, like children education, child marriage, then retirement, these are all long-term goals. For the long-term goals, you have to go for equity mutual fund or hybrid funds and direct stock investing. So depending on your goals, you have to invest. For long-term goals only, mutual fund is there. Then we are going to see the different types of funds depending on the risk. Number one, aggressive growth funds. Here, a lot of risk is there, increased risk is there. Here, big cap and small cap, this comes under this aggressive growth. So 7 to 10 years are there, you can invest in this aggressive growth. That too, never invest more than 20 or 25% in the aggressive growth fund. Then growth fund. So this is for normal risk takers. This is something concerned with the large cap fund, large and mid cap fund, flexi cap fund. For a simple person, just 3 or 4 funds in this category is sufficient. Not more than that. Only 3 or 4 in the growth category sufficient for you. Number 3, it is a growth with a tax saving, that is equity linked saving scheme. This is one of the best for ATC benefit. If you want to have another alternative for ATC benefit, that will be PPF. Then you want to have some more diversification. You want to diversify into some foreign countries like Europe, US, Japan, China. So you want to have some global diversification, which you can do. Even some flexi cap fund like Parag Parek flexi cap fund, they invest in US stocks. So you can go through these flexi cap fund, or there are direct funds which invest in international equities also. So growth with international diversification is another category. Then finally, conservative growth fund. This is for the persons who doesn't want to take much risk. Here comes only large cap fund, index Nifty 50 fund, and aggressive hybrid fund. Only 3 things are here for the conservative growth fund. So now we have seen, depending on the risk, there are funds. So we have to, what is our risk? What funds we are going to choose? We'll come to the next one. If you are a conservative investor, doesn't want to take much risk, very simple, you go for conservative growth fund. That is large cap, index fund, aggressive hybrid fund, these 3. For ATC benefit, ELSS or PPF, very simple. If you are a person with a moderate risk-taking capability, then you go for growth fund. And you can go for ELSS or PPF. I told you what are all growth fund. Large and mid cap, flexi cap, these are all growth. Then if you are a young person with increased risk appetite, you must go for aggressive growth, ELSS, global diversification. All the 4 you have to go if you are going to be a very young investor and little risk-taking investor. So this is going to be a basic depending on the risk-taking aptitude and fund selection. Then I will tell you one small slide why I call mutual fund as a superior investment. For example, you want to build 10 lakhs in 20 years. That is your aim. I want to have 10 lakhs in 20 years. You are going to invest in a bank deposit, which is going to give only 6% or 6.5. So you have to, every month, you have to invest 2,100 rupees. Same thing, if you are choosing an aggressive hybrid fund, which will give you 10% returns, you can invest only 1,400 rupees. If you go for a flexi cap fund, which will give 12% return, 1,100 rupees is sufficient to earn 10 lakhs in 20 years. See what is the difference. If you are going for a bank, 2,100, for a mutual fund, that is flexi cap fund, 1,100 only. So only I am telling mutual fund is a superior investment. Then next question is when to exit a fund. This is a tough question. There are three types of people who argue like this. My fund has made profit, so I am going to book it. My fund is making loss, I'm going to exit. No positive growth, no negative growth, like at present situation, no positive, no negative. Why should I remain in the fund? I'll go out of the fund. So these are the three arguments given by the people who are exiting from the fund. We'll see whether it is logic or illogic. Your fund made profit. You are going to sell it. What you are going to sell? You are going to sell the funds which made profit. You are going to keep the fund which has not made profit. So you are selling the winning fund, keeping the bad ones. There is a fund manager. That fellow is going to sell when a stock is moving up and buy when it's moving down. When the fund manager himself is doing the thing, why are you doing it? So it is illogical. The fund is making loss, exit. Don't exit for a short-term loss. If your fund is making loss consistently for 2-3 years, then only you can think of exiting. Then if there is no positive or negative growth, when to exit? No, just watch the Sensex. Sensex may not be moving positive or negative for part 2-3 years. Then your fund will also be the same. So there is no use of exiting from the fund. So this is a logic decision should be taken by the three type of people. Then when to exit a mutual fund? When you are nearing your financial goals. For example, you are saving for a children marriage. You should not wait until the last date of marriage. You must take out the money at least 2-3 years earlier when the market is in boom phase. Because you wait for the last moment, at that time market may crash down. So a few years earlier, when the market is in boom, you take away the money. Then Sensex is doing well, it is moving up, but your fund is not doing well. For the past few years, I have shown an example of Axis Blue Chip. So in that case, you can think of exit. Then funds not doing well in a particular category. For a large cap, your fund is not doing well, all other funds are doing well. For the past 2-3 years, you can come out. Any bad news, now there is some insider trading or something news from the Axis group. So some bad news immediately come out of the fund. That is my opinion. Any stock, any mutual fund, if there is a bad news about the fund house, I come out. So these are the exit strategy. Then what is the tax implication of the equity fund? So there is a lot of changes from April 1. So equity fund, the dividend you are going to get is added to your taxable income. It will be taxed accordingly, according to your slab. If you are going to go for a redemption, or going to sell the fund before redemption of the fund, before 1 year, you are going to pay a short-term capital gains of 15% immaterial of your slab. You may be in 5% slab, any slab, you are going to pay 15%. Then, if you are going to redemption after 1 year, you are going to pay a long-term capital gains of 10% without any indexation. But 1 lakh of long-term capital gains is exempted from tax. Then, if you go for debt fund, there is a lot of changes. Hereafter, debt fund are going to be clubbed. The income that is coming from the debt fund and dividend coming from the debt fund, everything will be added to a taxable income, and you have to pay the tax according to the slab. There is no long-term capital gains hereafter, those who are investing after April 1st. And one more thing, this one point, I want some clarification, just to make a clarification. They say gold funds like gold ETF, offshore funds, funds of fund will also have no tax benefit hereafter. This please check once again whether I am correct. So these are all the tax implication. Next, we are going to the final part. See, I told you whenever you invest in a mutual fund, naturally you have to follow the fund. Whether the fund is doing good or not, you have to follow the fund. How to follow the fund? Very easy. There is only one page document that is called fund fact sheet. You just download the fund fact sheet either from the net or from the fund house or from your broker. Anywhere you can download that one page sheet. It will give all the basic details, performance details, portfolio breakup, fund manager details. So all necessary things which you want to know about a particular mutual fund will be given in this one page document. So if you know how to read this one page document, that will be enough for you to follow any fund, either to take an investing decision or exit decision. See one or two facts here. See, I told you basic information. You see here in a small rectangle, rectangular space, we get a lot of details. What is the type of fund? It is a small cap fund. Investing style. There is a small box. I will see what is that box later on. Investing style. What is the assets under management? What is the net asset value of the fund? What is the expense load, expense ratio? What is minimum investment? How much risk involved? So all the basic details you can see this small space, which you download in the fund fact sheet. See, this is style of investing. Here there is a small cubicle. The vertical, horizontal line, which gives type of investment, whether the particular fund is investing in growth stocks. Growth stocks means they are growing well, though they are supposed to earn a lot, and they'll be trading at a high PE. Or value stocks. Value stocks are at a very undervalued price, or blend of two. In what they are investing, it will give a horizontal line. Vertical line, it will give whether you are investing in a large cap, how much, mid cap, how much, small cap, how much. So your investing style, you can know from this small box. Next, what is the risk? If we just see this risk assessment of the fund in the small graph, it will give high risk, low risk, and various grades of risk. So this fund, how much risk is involved in the fund? If it's a high risk fund, only young persons, not retired people, can go near that fund. Then information on returns. This will be given in the fund. See on the left hand side, it is given here, Axis small cap is given. What is the returns in 1 month, 3 months, 6 months, 1 year, 3, 5, 7, 10 years? So what is the returns? We just go through this, how the fund is performing, you can know. Similarly, on the right hand side, you can see what is the returns of the fund. What is the benchmark returns? What is the Nifty 50 returns? You can compare these three, whether your fund is performing well or not. You can buy the small comparison, you can see here. So this is about the information. Then next thing you can see in the one page fund sheet is a portfolio allocation. How much they have allocated in each sector. Suppose they have allocated huge amount in a cyclical sector, that fund is going to be risky. So you have to see in which sector they have allocated, how much they have allocated, whether it is good sector, you can see. Similarly, on the right-hand side, you can see what are the important stocks in which they have invested, whether these stocks are very good or stocks like Adani stocks. So you can very well see what stocks they have invested. So this is portfolio allocation. Then you can see some key ratios. I'm not going to the ratio because it will be very boring. I'll write it in my blog, you can read. There are a lot of key ratios like Sharpe ratio, R square, beta, volatility information, then portfolio turnover ratio. There are a lot of things are there. I'll write it in my blog. So all these ratios will be given in that particular fact sheet. So this one small fact sheet, if you download and know how to analyze that means the mutual fund investment is over. You need not rely on anyone for selecting the mutual fund or entering at the correct time or exiting at correct time. All the facts will be in your fingertip. Then, finally, before concluding, I once again thank our Ajay sir for repeatedly promoting my book. I sincerely thank him for promoting my book, Investment in Mutual Fund, jointly written by Dr. Wilson. One time you have to call Wilson. Wilson is an expert in mutual fund and stocks and art of choosing ideal insurance, wise investment, and investment in shares. These 4 books are written by me for the past 3-4 years. Then, last slide. So I thank you all for the patient listening. This is a little bored topic because a lot of facts are there, but necessarily you have to learn that. So my final slide, if your aim is going to be correct, you are going to hit the target. So if you are going to base your mutual fund depending on the goals, it should be a goal-based investment, risk-based investment, time-based investment. If you be correct in these 3 aspects, naturally your mutual fund is going to fetch 10 to 12% returns, sure as a long term. So you are going to become financially independent at a very early age. And you will be thanking Ajay sir for taking this initiative that made you to well versed with the mutual fund and all other aspects of personal investment. Thank you. Thank you very much.
Thank you, sir. Thank you. Wonderful talk. So clear, so crystal clear, so basic. This is the part 1 of Sri Dr. Tirumalai Kolondu sir. This looks very, very clear, crystal clear. Lot of questions are there posted. If possible, I'll pick up few, sir. If you consent, I'll post some questions orally. If you can give us a little bit of time, we will next 10 minutes or 5 minutes probably will take some important questions we can answer.
Yes, sir.
So
you can also help me in answering the questions, sir, because I think you've gone from postgraduate to doctorate now.
No, sir, not at all. We will have as part 2 of actually the selection of portfolio or selection of the stocks are important,
Yes,
as you said.
Yes,
and
sir.
that will take some time. We are trying to do monthly at least once or twice, sir. And I will definitely will be with our admin's consent, I will be inviting Dr. Wilson also for the stocks talk sometime in future. On my behalf and your behalf also kindly inform him so that our participants will be benefited for that, sir.
Sure, sir, sure.
So let us start. Few of the questions I have selected, sir. Sorry, participants, I will not be able to take all the questions. Already, sir has given an exit strategy. There were a lot of questions on exit strategy, sir. You have clear-cut given. If possible, can you just summarize the exit strategy for mutual funds, sir? Because people have said if the market is fluctuating, what do I do?
Sir, mutual, very simple, sir. Mutual fund is for long-term goals of 7 to 10 years. So you have to exit the fund only when you come near your goal. No other time you are going to exit from the fund unless the fund house is not good, or your fund is not performing well for the past 2-3 years, or your fund is consistently underperforming its pace. You are not supposed to exit from your fund unless you reach your goal. That is very definite, sir.
Correct, sir. So there are friends of mine who say, I have been in mutual fund for 3 years, I went into loss, so I sold it off. I think have a holding period, as sir is telling. I think a target goal of at least 5-7 years. I think 7 years is a good goal. To
Two mistakes they have committed, sir. They would have put the time frame to 7 to 10 years, number 1. Number 2, they should have compared the fund with the pace and benchmark. If the fund was not performing well when comparing these two, they should have exited. Otherwise, they should have kept the mutual fund. Because 1 year you may get 25% returns. Another year you may get only 3% return. It will be averaging out.
Sir, one more good question. It is for the benefit for all of us, sir. how do we calculate XIRR if we are doing a SIP investment, sir? And how do we calculate CAGR if we are doing a lump sum investment in the mutual fund?
CAGR calculator is that we need not bother our head with these things. There are CAGR calculators in the net. If we feed the basic details, it will give you CAGR. Similarly, for XIRR also, there is a calculators in the net. So we need not go for the complex formula and other things. We can take a calculator and feed what are all the details that is asked for. It will give the CAGR returns.
Yes, there are plenty of calculators available, especially if you type in the web CAGR or XIRR calculators, it will give you. Sir, which is the best app to invest in the mutual funds? You have already mentioned those who have joined late. They are asking like online directly in the
Sir,
fund.
for this question, so far I am investing only through a broker because he was my teacher for finance. So I'm not crossed from him to direct. So I don't have any personal idea of which app is very good for a direct purchase. By many says that through camps you can go, that is good.
For my personal, this thing is Coin, sir, of Zerodha. Zerodha has got a one more app in it called Kite is for stocks and Coin is for the mutual fund. The tax implication, they are saying, sir, senior pediatrician has called, sir. If we have a systemic withdrawal plan, as you have said, sir, from mutual fund, does it get tax implication? Will there be a tax implication?
Every time when you just go for a redemption of a particular unit, they will take it as a capital gains only.
Yeah.
So there will not be any tax exemption. So you have to pay the capital gains for the redemption amount.
Correct. Slab rate, I think LTG is not there, no, sir, in the mutual, but debt funds and LTG is no more there now.
No more, sir. It has been taken from the investment from April 1st. Prior investment you are still having, but after April investment, there is no LTCG.
Sir. Suppose one fund house I am investing, sir. Unfortunately, it has been bought up by another fund house.
Yes.
What do we do, sir?
So the fund house who bought the particular thing is a good person. You can continue.
Obviously, that fund is worth buying, so that's why the other fund house must have bought it. So we
need not take a lot of changes are taking place now and then, but you need not move out of the fund because it has changed hands. If the changed hand is not good, then only you have to think of moving out.
Sure. Sir, somebody said large cap fund is good or index fund is good, sir. Nifty 50 fund is good.
There is a lot of controversy is there, sir. Nifty 50 is good and large cap is good. But I feel large cap 50, if it's a selection choice of is good, then it outperforms the Nifty 50.
So you have to be a little knowledgeable, I think, sir, to select a good large cap.
Because large cap, they select from the, even that 50, they leave alone the bad stocks. They select only the good stocks. So that is one selecting criteria is there. So that is thing. Those who doesn't want to have any worry at all, for them Nifty 50 is good. You don't want anything, any worry, any reading, anything, nothing I want to do. I want a better return. For them, index fund is the best. You need not read anything, select the index fund, you put it, forget. You will get good income.
So total risk averse individual, I think index fund 50 is good because they don't have to bother. And also people say expense ratio is very low in index fund.
Very low. Very low, sir.
There is no churning, yearly only 2 times as per the stock exchange to keep the index fund ranking and allotment. Probably in the large fund, the manager will take the call.
Yes, I got Nifty Bs for the past 20 years, 15, 20 years. So almost 12% return I am getting all through. But at the same time, small cap index fund, I never go for lump sum. So whenever the market goes down, then only I buy small cap thing. So for Axis small cap, I recently bought at 56 rupees. Now it is trading at 61. So whenever it comes down in a bear market, then only I buy the small cap index. So index, if you have a little knowledge, that will give very good returns. You need not bother about so many books and other readings.
Sir, I know you have taken earlier index traded fund, sir. A word about index traded fund and the mutual fund, sir. ETF.
ETF, you can, your index fund, there is no need for you to buy a through demat account. Directly you can buy like the route I have told you. There is no need for you to have a demat account. For ETF, you need a demat account. But when you go for ETF, it is very easy to buy. So immediately on seeing the market, when it is go down, you can immediately buy the ETF. So buying and selling is very easy in ETF. But the index fund and ETF almost gives similar returns only. The same category gives similar return only. Only thing, there is no need for a demat account for index fund.
Correct, sir. There are plenty other questions on ELSS and all that, sir. I don't think so. We should be able to answer all those things. And I'm not taking any individual questions on the funds.
One, I will restrict to one word, sir. For ATC benefit, ELSS is the best.
Yes.
ELSS also, there are a lot of categories: aggressive, moderately aggressive, and conservative. There are a lot of categories are there. Depending on your risk-taking aptitude, you choose a fund which will be suitable for your risk-taking attitude. But ELSS is very good. If you are going to keep it for 3 years, naturally you are going to get. So here ELSS also, I got a lot of years, minimum 12% returns I got so far in ELSS.
Good, sir. Sir, back to basic question, sir. How to select the best mutual fund?
So the no mutual fund is best, sir, because you know the value research has got a very good team to select a best mutual fund. They give 5-star rating. Next year they change it to 3-star rating. So your mutual fund today 5-star, tomorrow it may become 3-star. So it will be constantly, it will be changing. So only I told you to follow how I select. I told you the selection criteria for the mutual fund. I put a slide. I see the three. Generally, I select a good fund house, number 1. Number 3, 5 years, 7 years return is good. Then number 2, number 3, the expense ratio and the exit load I see number 3. Number 4, if the fund manager is after moving with Wilson, I used to see fund manager also. So he is having a good knowledge about fund manager. I used to ask him about fund manager, whether he's a growth fellow, value fellow, which fellow. I asked all these things. Then only I decide about the fund. I also rely on the value research star rating. Value research in good. Morningstar also good. Star rating.
So that was a question, which website you recommend? So Morningstar and Value Research are good websites to go through. Thank you very much, sir. I think if there are many questions, but there will be a part 2 subsequently. And also our WhatsApp group is active. For next 1 week to 10 days, you can put questions in our WhatsApp group. If the time permits, our other participants and admin will also answer. If sir is having time and if he is having patience, probably he will clear one of your doubts. And I request all of you to purchase his book, not as a promotion, but as a basic knowledge. And the basic knowledge is there, very small book. You can finish it in few days, 1 or 2, 3 days, if you sit and read. And moreover, follow sir's blog. The blog of Wise Investments, he has also have, sir. What is the second blog's name, sir?
Only one blog, sir.
That is the youngsters, young
investor education series, and Nectar family education series. So for family members.
So he has got blogs which comes in very regularly. I think more than 150 posts are there, and they are very crisp and small, to the point articles. Keep reading his blogs. I think you will get a lot of knowledge in those blogs also. So dear participants, thank you very much for attending today. our financial intelligence for pediatricians by Pediatric Academy of Telangana, Indian Academy of Pediatrics State Branch. And I again thank my admins who have been helping us in maintaining our WhatsApp group and the information. And I thank our President, Dr. Yashwant Rao, and Secretary and Treasurer, Dr. Vamsi Kondle and Dr. Vaidjanath. And I also thank Dr. Pavan and Dr. RSV, who have given us the links and the technical support here, who has given the YouTube link, and it is unlimited YouTube. It is recorded. We will try and put the link in the WhatsApp, and you also can go on the YouTube and join and enjoy the talk of today at your leisure time. So thank you very much once again. A last announcement: I'm proposing to save the material in WhatsApp for the past 3 months, at least from the 1st of January 2023, in the form of categorization by the different pediatricians from 5 zones of IAP, Northeast, Central Zone, West and North and South. And I will allot the work to them, somebody to download all the posts, somebody to download all the links, somebody to download all the comments, or somebody to download all the documents. Let's see on the pilot basis, can we do that and release it to all our participants on 24th April, if possible, and our 2nd year anniversary of WhatsApp. Thank you very much once again.
One word, sir. One word, sir.
Sir.
What I have talked today, actually, I am writing for the past 15 days as a write-up.
Sir.
So the entire thing what I have talked today, I think I will start within another 2-3 days. I will start posting in the blog. So those who wants to have some doubts and other things, they have not followed particular slide, they can see the writing also. It will be posted for 5-6 days. It will be posted daily, sir.
And if you give consent, sir, subsequently we can put up a PPT in our WhatsApp group for them to go through.
Sure, sir. Any material you can use it. Yes, sir.
Thank you very much, sir. We will also put up the recorded talk of today. We will read your blog to a further clarification and answers for the next 1 week. And also, if possible, today's PPT we will put up in the WhatsApp group. Thank you very much, all the participants. And thanks once again to Dr. Sri Tirumalai Kolundu, sir, for coming and giving the talk today to our group. Thank you, sir.
Thank you, sir. Thank you.
We can leave.